put debit spread, not to be confused with a put credit spread, a call credit spread, or a call debit spread. This will be a put debit spread. It is January 16th. It just happened to be a Wednesday, and after I put you through the account real quick, show you some of my positions really quickly, I want to show you how to set up a put debit spread, not to be confused with a put credit spread, a call credit spread, or a call debit spread. This will be a put debit spread. All right, I'll show you what the difference is in a moment. But first, let's go to the account. I'm not sitting at all-time high, but I am about a spitting distance from 80,000. All right. So here it is, $79,548 in this account right now. Hopefully the heater is not too loud. Oh, it's always on. It's just so cold in California right now. You know what I mean? Wish I lived somewhere more tropical. Maybe later. All right. So let's see the positions. If you really want to know the positions, you can pause at any time. These are all the options I have going right now. As you can see, it's quite a bit of them. Most of them are call sales. I'm just collecting premium over time from some companies here. A lot of the mining and premium collecting stocks are just too low, so a lot of my puts have triggered, especially for chemical, and so now I have to start selling calls. Hopefully, if hopefully the shares go up a little bit, so my calls are worth more that I sell, and works out better. But so that's kind of what I'm waiting for actually over here with chemical. It's sitting at 890 right now. The current range that I've established is about 850 to 950 on the stock, and even though it's been going down, I've still been making some money on it from premiums, right? So you can see during the last year, it's down almost 28% year over year, and it's kind of tough. It's a lot of lost money here, but also a lot of money gaining premium. So, and if this goes up just $1, then all these losses will be reversed, and actually more than that. If it goes up like 80 cents or something, all these losses will be reversed, and I'll be majorly in the plus considering all the premium that I've sold against the company. So I have all these. I have some calls going on right now, and I have one put over here, $8 put. So that's chemical for you. That's probably the largest thing that I'm doing right now. Most of my premium income is coming from chemical. So that's cool. Apple, how's that going? If you wanted to know, I have 30 shares left in Apple. It says 130, but 100 of them are gone because I've sold them through the call option here. So don't look at these numbers really. They don't really matter if you don't know what's going on. I just have basically 30 shares of Apple still. And I kind of want to sell more. I mean, it's just in a very parabolic move right now. Just look at this thing. 104 year on year. 104% gain. It's crazy. Look at this parabolic move. It could go higher, but at this point I'm trying to like scale out of it a little bit because it just feels like a lot of the good news for Apple has already been priced in, and a lot of the super quote unquote super cycle is kind of priced in as well. So I feel kind of wary about being too overly exposed. I mean, look at the PE ratio of Apple right now is pretty high. It's 26.3. The dividends dropped under 1%. It's a 1.4 trillion market cap company. I just remember just a month ago or something when I was struggling to get through the $1 trillion mark. Now it's at 1.4. I mean, that's just ridiculous. So I am a long-term bull on Apple. It's just short-term, it's looking really rich. And we'll see how long that lasts. I still have 30 shares. I might exit all of them if it gets too crazy. Although I always want to keep like at least a little bit of Apple, maybe 10 shares or so, just to have exposure, in case there's a really insane blow off top that happens. Okay, so Apple is really not a big contributor to what the account is doing nowadays. I have this big silver call here. I have 6 contracts of silver calls that I've bought, and even though silver dropped a little bit as of recent, I'm still 46% up, or $366 up on these options. I rarely buy calls, but this was a very premeditated decision. Hopefully I capitalize on it. EXK has stopped dropping, and even though the price of silver has stabilized, it is actually gaining a little bit over the last week, which is kind of crazy. And over the last month, it's up 1.33%, but it's staying pretty flat overall. This is the 5-year chart. It looks like a nice support here. Although mining stocks in general, I don't really suggest looking at technicals too much when it comes to mining stocks, because there's a lot in play. Okay, a lot of the mining stocks, they will finance their operations by issuing additional stocks so they can raise funds in order to make improvements on mines or fund whatever they got to fund, pay interest on debt or whatever they need to be doing. Although this specific company doesn't have much debt, but just in general, mining stocks are not very good with the technicals. All right, it's possible that it goes the other way. It's just so wild, it's just wild. It's not a very predictable business, and it's not like it follows a trend. It's very cyclical. It's not a secular type of trend that the mining companies follow, and there's just way too much stuff going on in order to be able to get a proper technical analysis, in my personal opinion. Now, if you're a technician and you like to do this kind of stuff and you disagree with me, that's all fine. All right, you probably know a lot more than I do on technical. So anyway, it's just opinion I hold. If you want to educate me, I'll take that education. I'll listen to what you have to say. Okay, back to the browser. I'm going to show you how to set up a put debit spread. Okay, so we're going to do it with Apple, of course. One of the most liquid stocks out there. So it's a good one if you want to try it and trade options. Obviously, it's a little bit pricey, $315, and this matters because the options are 100 shares each. The contracts are 100 shares each, and it can add up to quite a bit of a sum if you want to play options with Apple. But some of the things that I'm doing, and this in particular thing that I'm going to be showing you right now, you can do with not that much money. Now, here's how you do it, all right? So first you want to buy a put. Okay, first, before any option strategy that you set up or any option play, you want to, of course, pick the date as usual. So let's say we pick January 24th, and we're playing some short term, which is kind of what you want to do if you're taking advantage of decay, especially, which we're not really doing, but let's just go with it. Expiring January 24th. So now you look at the options. This over here, this line represents the current price. And let's say we're bearish on the stock, meaning we think the stock is going to go down until January 24th. And so what we would do is we'd buy a put. Okay, up here you saw me click the buttons. It's very similar on the phone as well. You can tap these buttons here. You want to buy a put, and then you select this. On the phone, there's a button on the top right that will say select, so you can select multiple options at the same time, somewhere around here. And then let me see if I can show you. I have this new stupid case. So anyways, what you would do is you would buy a put first of all, and then trade options. Let me see. January 24th. You see the 4 things over here. It's like buy, sell, the lights, buy, put, sell, put, and then the button is, well, it's really difficult over here. So press the select button, and then you can choose 2 or more options on your phone. as to how you want to proceed. So here are the things you choose. So we just bought a put, and then you're going to click sell, and you're going to sell a put that's below it. Now, before we do that, let's take a look at the pricing, right? So it says long put over here, which is another way of saying that you are basically purchasing a put option, which is you're betting that the price will go down. And if you want to know how far down the price has to go before you make any money at all, Robinhood has been nice enough to give you the break-even price. So here's the break-even price. It's $310.85. So if you wanted to make money on that, that's how low Apple would have to drop by the date of expiration, which would be January 24th. Okay. Over here, you will see that it's telling you how much it will cost you, which is $415. That's $4.15 per share. Okay, so every options contract is 100 shares, so you multiply by 100. That would be 415, if my math is correct. Okay. Now you can also tell the price right here as well. You can see that on the phone too. So obviously, if you want, you can buy cheaper options, cheaper puts if you go further down the pricing scale. However, your break-even price drops even further, as you'll notice over here, right? So I can purchase the same type of contract, a put option, instead of for $400, $415, I can purchase it for $45, which is 1/10 the price. However, I would need for Apple to drop to 297.05 cents for me to make money on this option. Right, so you can see how I'm taking on a lot more risk, and I'm paying a lot less money, right? That's how it works. Going back to what I was talking about. So the price of this option is $415. We just bought a put, right? Now it's time to sell one, and we're going to sell one right below it. Okay? Now Robinhood recognizes what I'm trying to do because it's a very intelligent platform, and it says it right here. Put Debit Spread, which is what we're trying to achieve in the beginning. What does this include? This includes a buy of a $315 put, right over here, and then a sell of a $312.5 put. Now you see here that the total cost is no longer $415, but instead $110. Now, why in the hell would anybody want to do this instead of just buying a put? Yes, the price is low, but your gains are actually capped. So you can play Apple even if you just have $110. Look, you can go bull or bear. You can do a call debit spread if you want to be a little bit bullish and not pay that much. You could literally like double your money from this trade if Apple drops down towards the $310 range. So the kicker here is that you're spending on this money, but you can only really get back a number between these two. So if Apple hits 312.5, you would get that money. All right. So you would get that $250 of a difference minus the cost of your option. Okay. So you would get $140. So it's more than doubling your money if Apple drops down below 309.45. And you see how that works right there? That's what doing these multiple option structures does for me. It limits the amount that I can get back. Okay. Now, it's still good because rarely does the option drop a lot, right? I mean, with Apple, it's kind of volatile stock, so it could, China could announce something that they're banning Apple products tomorrow and it could drop down to $200, but the likelihood of that happening is not very high. So, but the likelihood of this happening is fairly high. even over here, it gives you estimate percentage chance of profit, which is a bit bogus. I mean, I don't know how they come up with these percentages, probably, but anyway, you don't want to count on these percentages to make that determination for you. So, in any respect, this is how you do it. Total cost $110. Potential win 250 minus 110. So you bet 110 to potentially win 140, but you could win $1. You know, you could lose all your premium if Apple doesn't go down at all. Right? You lose $110. That's it. It's over. So you have to be real careful about what you're doing here. You can't just willy-nilly do it. But that's how you do a put debit spread. I think it's pretty useful thing to do, especially if you're a little bit bearish and not too much bearish. You think that some stock is really topping off, or maybe it's in a bear trend, and you just want to play the trend and you continue that downtrend, but you might not have enough money to buy a put option outright, at least not one that has a higher probability of winning, or maybe you have $400, but you want to instead buy 4 of these options. So you're betting the price will go down just a little bit, and you would get more money if the price went down a little bit by doing this structure rather than just using all the money to buy one put option. You get what I mean? So you could basically leverage your leveraged position. All right? You get what I'm saying? So you can, instead of buying one option, right, you can buy 4 options, except you just limit how much each one can win, right? So you can really stack up and get some huge gains out of this if you guess or you pick the direction right. Now, in general, it's very risky, of course, to do short-term option trading. A lot of people get burned. Even the super safe ones, they'll have losses. So before you make such a trade or option strategy, please understand the risk and the fact that you could lose all your money and no one else is responsible for your losses but yourself. Okay, so please don't play around with money that you don't have, unless you're willing to take you understand what the consequences are and you're willing to go through them. And if you're still confused, make sure that you before you do anything like that, you consult with a professional, maybe a professional financial advisor, to explain some stuff to you. And yeah, that's about it. I think hopefully this helped someone. I mean, personally, I don't use it too much, the spreads, but I wouldn't not recommend them. I'd probably rather have people who are just starting out do these kinds of spreads, because the risk, the amount of money that you could lose is smaller, and yet you can get a lot more excitement and a lot more gains, and more consistent gains, and you can have more opportunity to play around with multiple options, multiple companies, or whatever you're thinking of doing, by doing spreads rather than outright long puts, as Robinhood likes to put it, or long calls. All right. So anyway, that's about it for today. Hopefully I'll make another one tomorrow. Maybe not. I have a couple things coming up, but maybe Sunday or Monday. All right. With that said, peace out.